Maximize your income with these 5 key tax strategies to reduce your tax liability in 24-25. So if you are new to my channel, I am an accountant and I have a couple of businesses that I run. So these are tips and tricks, basic ones that we would use to explain to clients what they can do to reduce their tax liabilities. So I am giving this advice for free, but always speak to a tax professional as your personal situations might be a little bit different. So the 5 tips on how to reduce your tax liability. The first one is marriage allowance. Now, if you are married or in a civil partnership, you will have an allowance that you are able to claim if one of you is not working or using up your personal allowance. So everybody gets a personal allowance of $12,570. However, as a married couple, if you don't use up your allowance, you can transfer up to $1,250 of that allowance over to your partner. This will give you a saving of around £252 a year. And I know you might say, Mariam, that's hardly anything, but that amount can actually be backdated. So you can go back a number of years and that can actually increase to about £1,000 in tax-free income from the government or even a refund. The next one is taking advantage of salary sacrifice schemes. Now, a lot of companies do this, so always ask and see whether or not if it's available for you to do. But one of the methods is by giving a salary sacrifice in return for a benefit from the companies. Some of these can be things like pension contributions, pension advice from your employer, as well as childcare vouchers, nurseries that may be company nurseries or workplace nurseries, and the bicycle and cycling equipment scheme. So there is a cycle to work scheme and things like that that you can take advantage of. If you're already doing it, why not? The next one is to increase your pension contributions. So this is where any of your pension contribution that you do get, you will get a tax relief from. Now, the bonus part of this is it depends on which tax band you're in. So if you are in 20, 40 or 45%, then you will get that band tax relief off. So for example, if you're paying tax at 45%, you will get a 45% tax relief on your pensionable contribution. However, it's important to note that this pension contribution is not available to you immediately. You can only access it after 55 years of age. However, that is increasing in 2028 to 57 years of age. So that's just an important note to point out. The other way is to save in a tax efficient way. And if you are saving and getting interest income, then you are paying tax on that interest. Now, in some situations, you can open up a PSA or an ISA, and that means that if you are in the basic rate, you have $1,000 as a tax-free allowance for interest payments. And if you are in the higher rate, that goes up to $500. If you are in the additional rate, unfortunately, you get 0. And the last one is to use dividends as another form of income. So I do have an in-depth video about this, explaining it in full detail on my YouTube channel. So do go and follow that and like it for more information like this. But what you can do is pay yourself a split between salary and dividend. Speak to a tax advisor to find out the best split for you. But the dividend allowance is going down to £500 this year. So this means from anything from April 2024 to April 2025, your dividend allowance is only reduced to £500. However, dividend tax is lower than income tax. So it's always something to note and have a really good split between the two. If you've got any questions, then put them in the comments below, but I will be happy to respond to those. I do have lots and lots of free information that I give out on my TikTok page. So do go and follow that, like and comment for more of these kind of videos.